Welcome to the Explainer. So, I want you to picture a massive digital supermarket. But here's the twist. Instead of buying milk and bread, you're trading gold, oil, and aluminum. All of it in the blink of an eye. Well, that, in a nutshell, is India's multi-commodity exchange, or MCX. And today, we're going to dive right into the incredible financial engine that makes it all run.
It's a wild question when you stop and think about it, right? I mean, the prices for the actual raw materials that build our world, the copper in our wiring, the silver in our phones, they're all set in these super high-speed digital arenas. And in India, one name just dominates that entire space.
So, at its heart, a commodity exchange like MCX is basically a regulated marketplace. Its job is to bring transparency and crazy efficiency to the trade of raw materials our economy depends on. So, how's this digital supermarket actually doing? Well, we're about to find out because we're digging into their latest public report.
So, let's talk about the first quarter of fiscal year 2026. How did MCX do? Well, their report card is out, and spoiler alert, it was an absolute blockbuster. Let's jump right into the highlights.
First thing, let's look at total revenue. This is all the money the company brought in. It shot up by a massive 60% compared to the same quarter last year. That is a huge leap. It shows some incredible momentum right off the bat. But wait, it gets better.
What's maybe even more impressive is the growth in EBITDA. Now, you can think of EBITDA as a company's core operational profit, and a jump of 81% year over year, that tells you the business isn't just getting bigger, it's becoming way more profitable at its core.
And then we get to the bottom line. After you pay for everything, all the expenses and taxes, their final profit soared by 83%. Just think about that for a second. More revenue led to way higher operational profit, which then led to an even bigger jump in the money they actually take home. By any measure, that's just an exceptionally strong quarter.
A performance like that really makes you wonder, okay, how on earth are they doing it? What's the secret sauce inside that trading engine? Well, the answer starts with their, frankly, unbelievable position in the market.
And, well, here's a huge piece of that puzzle. MCX's share of the Indian commodity futures market isn't just dominant. At 99.9%, it's basically a monopoly. To put it really simply, if you trade commodity futures in India, you are almost certainly doing it on MCX. Period.
And if we break that down, their grip on these specific, really high-value segments is just absolute. We're talking precious metals like gold and silver. They have 100% of the market. Base metals like copper and aluminum. Yep, 100% again. Energy, which includes crude oil, a mind-boggling 99.97%. They completely, totally own the most important parts of this market.
So where's all this trading action coming from? It's really driven by three main pillars. Nearly 3/4 of their entire futures turnover comes from bullion, that's your gold and silver. Another 18.6% is from energy, and about 6.7% from base metals. These three things, right here, are the foundation of their entire business.
Okay, so they completely dominate the market as it is, but you don't post 80% profit growth by just sitting around, so what's the game plan for the future? How are they fueling this incredible growth?
Looking at their investor report, we can pretty much boil their strategy down to a simple three-step recipe for success. First, invite more players to the game. Second, create new things for them to trade. And third, build awesome new platforms to make it all happen smoothly. So let's break down how they're actually pulling this off.
All right, step one is all about growing the whole ecosystem. By letting banks act as brokers, boom, they open up a massive new pipeline of customers. They've also thrown the doors open for the big guys, mutual funds, portfolio managers, and even foreign portfolio investors. It's simple, right? More people playing means more trading, which means more revenue. It's a really powerful growth loop.
Step 2 is about giving all those players more interesting things to do. They're not just sticking with the same old stuff. They've brought in options trading on commodity indices, which is a much more sophisticated product. They're also getting local by adding domestic brands for gold and lead delivery. And they're launching smaller mini contracts for metals and energy, which makes it way easier for smaller investors to get in on the action.
Now, this strategy of constant innovation, it's not new for MCX. Not at all. In fact, they have a long history of being first.
which gives us a pretty good clue as to what might be coming next. Their track record of milestones really tells the story.
You can see their whole history is just a series of firsts. They start up in 2003, then they become India's first listed exchange in 2012 and launched the first dedicated clearing corporation in 2018. Just last year, they rolled out a brand new high-tech trading platform. And what's the next frontier? They've already signed a deal to develop electricity derivatives. So yeah, they are constantly pushing into new territory.
Of course, it's always good to remember that this is just a snapshot. It's based on their public reporting. And while it doesn't cover every single little detail, it gives us a fantastic window into how this incredibly powerful market actually works.
And that really brings us to a final, much bigger question. The story of MCX is one of incredible dominance in a country that's growing like crazy. But as our entire world gets more digital, more connected, will these powerful electronic exchanges become the ultimate deciders of value for, well, everything? From the energy that powers our homes to the metals that build our cities, it's a fascinating thought to chew on. Thanks for joining The Explainer.